What's up, trading bros and sisters? Grab your coffee and your Kevlar, because tonight we've got bombs in the air and earnings after the bell. This is Trading Floor.
Quick reminder before we get into it, nothing we say is financial advice. We're two guys talking markets. Do your own research, make your own calls.
The market had a choice yesterday. Run from the bombs. Or buy the chips. It bought the chips.
Marvell Technology, ticker MU, up 20% in a single session. Advanced Micro Devices, ticker AMD, up 8%. Western Digital hit an all-time high.
Bloomberg wrote the headline for us. Memory mania overshadows investors' fears around Iran war. Like, the bombs went off, and traders just shrugged and bought silicon.
The rotation was clear. Memory chips and artificial intelligence accelerators went green. Mega cap software went red.
And then overnight, the other shoe drops. The United States and Israel struck Iran again. The Supreme Leader issued a warning.
Oil closed at $90.19 on Tuesday. That was down about 4% on peace optimism. Now it's reversing overnight, heading back toward 100.
Germany slashed its growth forecast. A top bank killed the Goldilocks scenario. The word recession is back in mainstream headlines.
Through all of that, VIX sitting at 17. The market is not showing fear.
Either the market is the smartest person in the room, or it's asleep at the wheel. There's no third option.
I've been thinking about that VIX number. The MSCI All Country World Index, the global benchmark, has Taiwan, South Korea, and China at 65% of total weight.
Wait, say that again.
Taiwan, South Korea, and China, 65% of the global benchmark. The thing you'd sell to price in regional escalation is the same thing you're buying for the artificial intelligence thesis. You can't express the fear without blowing up the portfolio you're trying to protect.
So you literally can't run.
It's like trying to run away from a building you live in. VIX at 17 might not be bravery. It might be structural paralysis.
Trump said on camera he doesn't care about gas prices. Every analyst I read is treating that like a gaffe. When a president says he doesn't care about gas prices while actively striking another country, that's not a gaffe. That's more strikes are coming, and we've already made that calculation. Oil knows it.
Oil at 90 is livable. Oil climbing back through 100 changes the inflation conversation before the personal consumption expenditures data drops later this week.
The market chose chips. Tonight we find out if the chips deserve it.
Which brings us to Marvell Technology, ticker MRVL, reporting after the bell tonight.
Your boy has skin in this game. My paper portfolio, paper account, not the live system, holds 66 shares of Marvell. I've been watching this one for weeks.
Marvell isn't a memory chip company. They build custom Ethernet switching and custom artificial intelligence accelerators. Their hardware connects NVIDIA GPUs inside hyperscaler data centers. The networking layer that sits between compute and storage.
Give me your analogy.
If NVIDIA is the engine, Marvell is the transmission.
That's the one. That's the one right there.
The estimate tonight is 61 cents earnings per share. The options market is pricing a 15% move in either direction.
We already got the memory confirmation from Micron's 20% day. If Marvell guides strong tonight, that's the artificial intelligence capex story confirmed from memory chips all the way through to custom networking silicon.
3 layers of the artificial intelligence hardware stack all pointing the same direction. Memory, compute, networking.
But if they stumble, soft guide, disappointing numbers, then Micron's 20% day might have been the peak. Head fake on the whole hardware thesis.
That's why tonight matters as much as anything else this week.
Here's the other side of this earnings picture. Because it's not all celebration.
Zscaler. 2 weeks ago, May 15th, they reported and got wrecked for giving honest forward guidance. Kramer flagged it. Slowing sales cycles, leadership changes. He's still talking about it today.
Software companies are being punished for telling the truth. And tonight, the pattern continues.
Salesforce, ticker CRM, estimated at $2.30. Snowflake, ticker SNOW, estimated at -59 cents. Both report tonight.
Hardware is celebrating. Software is confessing. Is artificial intelligence CapEx actually showing up in enterprise software revenue yet, or is all the money still going to chips?
That divergence is the defining story of this earnings season.
Two more to track before tomorrow's open. PDD Holdings reports pre-market, estimated at $2.03.
China, consumer play. And the tariff angle just got worse. The United States Trade Representative Greer was at the Council on Foreign Relations. He said tariffs on China are likely always higher going forward. That's a policy statement, not a negotiating position.
Futu Holdings, ticker FUTU, dropped 28% on a $271 million Chinese regulatory penalty. China exposure is getting squeezed from both sides right now.
Dick's Sporting Goods, ticker DKS, also reports pre-market tomorrow. Estimated at $2.87. Consumer discretionary health check.
My Live system closed a position in Dick's Sporting Goods back on May 4th. Locked in $57 profit. It's out, but I still want to hear what they say about where the consumer is.
Thursday after hours, Costco and Dell. Dell is the direct read on artificial intelligence server demand. Costco tells us where the consumer is spending.
I need to talk about something I've been watching all week. Because it touches everything.
Musk.
The Department of Defense just awarded SpaceX a $2.29 billion Space Force contract for a military satellite data network during an active war.
And Starlink already raised fees on the government during the Iran conflict. The Pentagon had no alternative. They paid it.
There's chatter on CNBC. Unnamed sources, not confirmed, no deal announced. About a possible SpaceX-Tesla merger. We're labeling this speculation up front.
Understood. Speculation only.
But here's the thesis. Musk isn't building a car company. He's building the infrastructure layer of civilization. Satellites, electric vehicles, artificial intelligence, rockets. If that merger ever happened, buying Tesla stock means you own a defense contractor, a satellite network, and a consumer vehicle company, all at once.
Ross Gerber, Tesla investor, said publicly that Tesla sales have bottomed because war-driven gas prices are pushing consumers toward electric vehicles.
The irony of a war being bullish for Tesla.
The synergies between the companies are real. Shared engineers, shared compute, power infrastructure overlap. But a merger faces Department of Defense approval, Securities and Exchange Commission scrutiny, and Federal Trade Commission review. You're merging a defense contractor with a publicly traded consumer company. That's a multi-year regulatory process, at minimum.
And the governance situation is already a mess. Shareholders have been in a fight over Musk's compensation for 2 years. You add SpaceX shareholders to that equation.
The convergence between the companies is real. The merger probably isn't.
I'm not telling anyone to buy or sell based on unnamed source chatter. But the underlying question is real. You're betting on whether civilization's infrastructure runs through one person. That's either the greatest trade of the decade or the most concentrated single point of failure risk you've ever taken. Know which one you're in.
Know which one you're in.
Let's talk about what's coming later this week that actually has me paying attention.
Personal consumption expenditures, CC, data. Thursday, May 28th. I cross-checked the date. It's Thursday.
TB literally just verified that on air because I saw a calendar that had it listed wrong. That's what we do here.
Month-over-month expected lower. Year-over-year expected higher. That split screen matters.
Walk me through it.
The Fed watches year-over-year. A split print. Progress on the monthly side, but still elevated annually, gives them cover to hold. It does not give them cover to cut.
Citadel Securities came out and said the Fed is falling behind the curve. They don't talk publicly without conviction. That's a heavyweight telling you the Fed should already be cutting.
And JP Morgan's Matejka published the opposite view. Market is overpricing rate hike risk. Cuts are still coming. Two major institutions, opposite read on the same data.
Kevin Warsh walks into all of this his first week as Fed chair. Welcome to the job. Here's a war, a split inflation print, and two Wall Street banks telling each other they're wrong.
My system is flagging the iShares Russell 2000 IWM at $290 as the most rate-sensitive level on the board right now. Small caps were up 1.9% Tuesday. That's the first sector to give back those gains if CA is hot.
My live system is sitting 45% cash. 4 positions: AMD, Broadcom, ticker AVGO, Alphabet, ticker GOGL, and Coca-Cola, ticker KO. That's it. The system said, "Show me the data before I deploy." I'm listening to it.
One more developing story before callouts. Nuclear energy. Jefferies put out a note boosting nuclear exposure. Oklo is up on a domestic reactor fuel program. Japan is reviving its nuclear build-out.
Connect the dots.
Artificial intelligence data centers need massive baseload power around the clock. Nuclear is weather-independent, war-resistant, and dispatchable. The power demand from the artificial intelligence build-out may be too large for wind and solar to absorb alone.
We're not making a trade call on it today. Just planting the seed. That thesis is going to matter more as the year goes on. File it.
Filed.
All right. I need to talk about a trade. Paper account. The one where I test gut calls.
GameStop.
GameStop. Ticker GME. The stock that made me. I was in Worcester, broke, watching DFV, the Roaring Kitty, turn a nothing trade into a legend. My first real win was on that stock. I named my cat after the man.
I remember.
I opened a paper position on GameStop a couple weeks ago. Gut call. No system signal. Just, it's GameStop. It's DFV stock. It's got history. The stop hit yesterday. Down 10%. Minus $255.
The stop did its job. That's what it's there for.
I know. And here's what it taught me again. Because apparently, I need to keep learning this lesson. There are no sacred cows in trading. Not even the stock that started everything for you. Not even the one with the best story. The rules don't care about your origin story. They care about the price.
I got stopped out of NVIDIA recently. Down $2,000. 80% of the position. I leaned long on the laggard while the rest of the supply chain was ripping around it.
That one stings different.
It does. But the stop did its job there too. That's the whole point.
The system is what keeps you in the game long enough to catch the next one. Not the wins. The risk management that keeps the losses from ending you permanently.
Callouts.
Here's mine. Marvell Technology. Marvell. Limit order at $90. This is only triggered if Marvell beats tonight and the guidance is strong. I am not chasing a gap open. If they report and the stock opens at 110, I'm watching from the sideline.
Sizing?
$2,500. Stop at 80. Target 105. Post-earnings dip entry, not a reaction. Buy.
Advanced micro devices. Limit at $495. Breakout retest level. Stop at $475. Target is let it run if Marvell confirms the networking layer tonight.
2,000?
2,000. Both of us sitting below current price. Both waiting for the dip. Both conditional on tonight's report.
Discipline over conviction. That's the whole show.
Neither of us is buying it open. We're willing to miss the trade if it doesn't come to us.
Here's what we're watching tomorrow. First, Marvell earnings verdict. Beat and strong guide confirms the artificial intelligence hardware widening from memory all the way to networking. Miss or soft guide and Micron's 20% day may have been the peak. Level to watch on the pullback, $90.
Second, personal consumption expenditures, CC, Thursday. Month-over-month progress versus year-over-year pressure. IWM 290 is the first casualty if the print is hot.
Third, Dell after hours, Thursday. Direct read on artificial intelligence server demand. If the hardware thesis is real, Dell confirms it in their data center numbers.
Fourth, enterprise software tonight. Salesforce and SNOW both report. The honesty tax continues. Watch whether artificial intelligence spending is actually showing up in their numbers yet.
The market doesn't owe you a green day, but you owe yourself a plan. Stay sharp out there. Don't check your portfolio during dinner. The candles will be whatever they're going to be. See you tomorrow with the Marvell Verdict Trading Family.